family. It's Jay Morrison, CEO and founder of the Tulsa Real Estate Fund and the Jay Morrison Academy, as well as co-founder of Easy Business Funding. Now, I want to give you guys a special video because it's something that helped me to create a multi-million-dollar empire. And it's the billionaire basics and the billionaire secrets to how anyone can create wealth. And so I know that sounds huge and it may be a sexy title, but this is a real lecture that all of us need to know in order to secure our family's future financial legacy and to grow our wealth. And then in future lectures, I'll show you how to protect your wealth and protect your assets. But the first thing we all need to know, whether we are someone who's an entrepreneur, we are someone out there working for cash, we are a veteran or a government employee, or we're in the working class, we are a pro athlete, or someone who's more affluent or of more abundance as a businessman or a woman, I want to show you all what every billionaire knows and does that the common person does not know and does not do, that we don't learn in high school, we don't learn at home, and what they do that allows them to continue to accumulate wealth. And it starts with a thought process and a billionaire basic strategy. And that strategy is the opportunity cost of money, right? So opportunity cost is when you look at anything and say, what's the next best thing I can be doing with, right? So there's opportunity cost of time. You may spend 30 minutes on Instagram or watching Love and Hip Hop, or 30 minutes doing anything you may be doing. You have to ask yourself, is this the best use, or what is the next best use of my time? Same thing goes for money, right? So I don't care at what level you're at. You may just have $10,000 or less. You might got 100 grand. Hey, you might be up in the M's, right? You got $1 million or more. Well, we still all have an opportunity cost for our money, right? So you could be at $1,000. Principle, same principles still apply. So with $10,000, $100,000, or $1 million, you may be in that cash column, right? You got the money sitting in a shoebox. You got it in a safety deposit box. You got it in your dresser. You just don't trust the banks and you just like having cash money. Well, you got to ask yourself, with $10,000, $100,000, or $1 million in cash, how much money is that cash making you? How is that money working for you? Is your money gaining you what's called ROI, return on investment? Because there is a such thing in fiat currency, money, cash, that the money and the cost of the money will depreciate in value because of inflation, right? The cost of living appreciates, so the cost of the money or the value of the money depreciates. So the cost of living, inflation, goes up about 3% per year. So $10,000 today is not going to be worth the same as $10,000 10 years from now or 5 years from now. Just as $10,000 today isn't worth what it was in 1980, right? If you had $10,000 in 1980, you might have been kind of balling a little bit. Now $10,000, like, it's 10,000, it's 10 stacks. So if you have cash money, you're making 0% ROI on your money. And in reality, you're really losing 3% on your money, right? In all categories. Now, what the wealthy and billionaires know is that, hey, me sitting around as a billionaire with all this money in cash, I'm losing a lot of money every day. And not only am I losing it because of inflation, this money got to go to work. I bust my butt. I've worked hard. I've used my ingenuity and talent and risk to build up my treasure and build up my wealth. Well, this money got to work too, right? So we know we got the cash game. Now, what about those who are like, you know what? I have my money sitting in a bank, right? So we got our cash. I'm going to put it in our little shoebox, right? So we got our cash. We got our shoebox money and our cash money. But then we have those who are like, you know what? I'm going to put my money in a checking account, savings account, and checking account is most likely equivalent to cash. You get practically zero return on investment on a checking account. So you got $30,000 sitting in a checking account, your money is not doing anything for you practically, and you're still suffering from inflation. So now say you put your money in a bank, but you try to wise up and you put it in a bank, right? CD, right? You put it in a certificate of deposit. You lock your money up for 3 years, and that bank says, we're going to give you 3% ROI over 3 years if you tie your money up through a certificate of deposit at a bank in a CD. Okay, so you're getting that 3%. Let's take away inflation. Let's say inflation didn't exist. So that would mean you were making $300, $3,000, or $30,000 respectively. So if you had $10,000 tied up for 3 years, you'd be making $300 essentially per year. Now there will be some compound interest as the years go on, but let's keep it basic and simple here. So you're making $300 by tying up $10,000. You're making $3,000 by tying up $100,000, and you're making $30,000 by tying up $1 million. And a lot of people tie their money up in CDs, and I understand diversification, but when we're talking about building wealth and the basic strategies, is what's the opportunity cost? What's the next best thing I can be doing with my money? So where your money is currently parked, ask yourself, is there a better way? Is there a better thing in which you can park your money? So let's go to the next. Then we go and we have our stock markets, right? We got our pension accounts, right? We got our stock markets, our money markets, our financial markets, right? Mutual funds, etc. Stocks, 401ks, right? Pensions. So say your 401k, your pension, your IRA is killing it. Say it's crushing it and making a whopping 6%. This was 3%. Well, say it's killing it, making a whopping 6%. And for those who are working class and have a 401k, pension account, an IRA, a mutual fund, go check your statements and see where you land. So if you're at 6%, it means you're making $600 on $10,000, $6,000 on $100,000, or $60,000 on $1 million. And see, they don't teach us this in school. You never get this information. You might learn how to bake a cake in school. You might learn how to carve something in wood shop. You might learn how to dissect a frog or world history, but they won't teach you basic financial strategies that will better your family's legacy and your family's financial future. So why they don't do that is because these big corporations and banks, they want to make you feel fearful of you investing your money into yourself. They want to say, you give us your money and we'll take care of the rest and we'll give you back these percentages for our hard work of investing your money. They want to control your dollars so they can get richer and richer and you stay poorer and poorer. They want to say that you're not wise enough, you're not astute enough, you are stupid, you can't figure it out, trust us, leave it to us and we'll give you the crumbs. That is the philosophy of the elite and the super wealthy and the rich. It's how they got rich. Not only do they do this with their own money, they want to leverage your money and risk your money, give you back pennies, and then they keep the rest. So let's talk about some alternatives. So some alternatives that we came up with, because I grew up in poverty, because I understand what it takes to build a multi-million-dollar empire. On my way to billions, I want to give back the game to those just like me who can relate to me, who understand where I'm coming from, whether you're working class or you already have money but you want to grow your wealth. You shouldn't be an NFL athlete with $1 million in the bank only getting 3 to 6%. There needs to be something in your portfolio that's more aggressive. You need a knowledge base, you need advisors, you need wealth strategists in your corner who can really grow your assets outside of risky barbershops and record labels and car washes. There's more you can do with your money, and there's better ways we can protect your assets. And I can't wait to teach you those lessons next. So we now get into the big boy. These are windows. This is a building. We're talking about real estate. Now, in the real estate market, what's cool about it versus these other opportunities, right? Opportunity cost of your money. If you were to park your money in real estate, right? And there's two ways we're going to talk about how you can do it. You could do it as an active investor or a passive investor, right? So as an active investor, if you get really good at it, build the right systems, build the right team, understand how to evaluate deals, understand how to leverage deals, syndicate deals, wholesale deals, assign contracts, manage property managers, be a landlord or manage a property manager. If you learn the skills of being a real estate investor, you could make anywhere from 12 to 33% returns on your money. I mean, that's not unrealistic at all. But let's call it 20%, right? As an active investor. So as an active investor, getting 20% on your money, you're now looking at $2,000 on your $10,000, investing $10,000 on your $2,000. You're now looking at $2,000 on your $10,000, right? Investing there. Not to mention the tax advantages from owning the real estate. You can depreciate the capital, a tangible personal property of the real estate. Not to mention the power and control. You own the mineral rights, the air rights of the property. So you get all these benefits by being a landowner that you will not get in these other financial holding opportunities. Also, as an active investor, let's look at the $100,000 side, right? So on the active side, $100,000. You're looking at $20,000 on your $100,000 at a 20% return as an active investor. Or you're looking at $200K, K meaning 1,000, as an active investor on $1 million. If you're going to be active, and this is not that hard. And you can do that on one deal. So if you make 20% on one deal, just say in 9 months, or say 6 months, that's really 40% annualized your return. But we'll call it 20%. But this is a different, and then you think about it. What do all the banks and financial institutions do with your money? They go buy real estate. These banks and financial institutions take your money, hold it, give you penalties if you want to touch it, and then they go buy the real estate. And then they get the appreciation, they get the tax advantages, they get the cash flow, they get the mineral rights and the air rights, and you get back 6 or 3%. So now there's another opportunity that we've created for you all to be able to invest passively. If you don't want to create a full real estate investing business, you don't want to get your LLC and start branding and send postcards and manage a team and take calls and negotiate with sellers, we created a vehicle, a government regulated vehicle, an SEC regulated and certified and approved vehicle called the Tulsa Real Estate Fund for you to invest in real estate passively. Whether you have no experience or limited experience, you don't have the time to invest in real estate, but you want some of the benefits of owning real estate. So in the Tulsa Real Estate Fund, as a passive investor, let's see if my black marker, this one's a little better. Oh, perfect. So as a passive investor, right? This means you're feet back, hands back, right? You're just reaping the benefits through some investing. Just like these are passive investment vehicles, these two. This is just money sitting there getting wasted. Cash. Cash is sitting there getting wasted. But if you invest your money in these vehicles, you're passively investing. But you're not getting great returns or opportunity for upside on those investments. So what we did with the Tulsa Real Estate Fund, for those of you who want to be a passive investor, is we give our passive investors an 8% preferred return. We call it a pref. That means before our fund makes any profits, you get an 8% preferred return, right? But then on top of that, because I don't think that's enough, honestly, I wouldn't stamp my name and be a founder and a fund manager of a fund just for 8% preferred returns at this point. I'm too socially driven. I want to help the everyday person. That shows not just in my words, but in my works. I really want to help everyday people, working class people, those who started from the bottom or in the bottom, and still offer strategy and insight and opportunity for those who are already made it, right? And want to grow their wealth. I'm not even forgetting about you either, right? So we're all in this together. Outside of our 8% preferred return, we also will give you 50% of the profits that we make in the deals that we do. So if we're doing flips, buying blocks of houses, agriculture, hotels, hospitals, schools, apartment complexes, whatever it is, you get an 8% preferred return and you get 50% of the profits. So what that looks like is, if this equals out to, after your 8% preferred return and your 50% of the profits, let's just say that was 16% passively. Now mind you, this 20% is you having an active business, day-to-day investing in real estate, analyzing deals. You spend a lot of time and energy, right? And it's an opportunity cost of your time. If you don't want your time tied up into this, we can get you 16. And mind you, this is theoretical. There's no promises. There's no guarantees. I must disclose that. There are no guarantees in investments. You can lose all your money in investments. This is in any vehicle, right? But, or practically any vehicle. But just say on average we got you 16%. You're looking at $1,600 passively on your 10,000, 16,000 passively on your 100, or 160,000 passive. Oh, excuse me, wrong lane. $160,000 passively, right, on your million. So we're giving you two options for you to be able to invest in real estate and have a better opportunity cost of your money. Look at where the billionaires and millionaires are parking their assets. You don't have to believe me. Men lie, women lie, numbers don't. 88% of the real estate in America is owned by 10% of the population. Let me say it the other way. 10% of the population in America owns 88% of the real estate. That should tell you something. Wealth is generated through real estate because of the passive income of rental income, which is called cash flow, passive income, because of the appreciation in equity, because of the tax advantages, because of the mineral rights, the air rights, and the power and control you get by owning real estate. I'm giving you two ways you can earn and learn in real estate. So the gist of it, the billionaire secret, the blueprint for how you build wealth, is you got to find better opportunity cost for your money. Most of these businesses, these financial institutions, they leverage or they invest in real estate as their core asset, and they leverage real estate to make more money. It's flat out what it is. So let me show you how you can do it today. Simple as this. If you want to get started, we said there's two sides. There's our active side and there's our passive side. If you want to get started on the active side, I have tons of trainings and strategy that can help you. I can hands-on coach you and help you. This is not hard. It's not rocket science. I'm doing it 12 years. But what you need to do, if you want to do this, I want you guys to come on board to my one-on-one coaching in the J. Morrison Academy. This is where you work with me and my top coaches, and we will hands-on train you from anywhere in the country, anywhere in the world. I have clients in the UK, clients in Nigeria, clients across America, clients in Canada. Let me train you on how to build a real estate investing business. Not be a house flipper, not be a wholesaler, but be a businessman or woman who runs a real estate investment or development company. Let me show you that. Now, for you to get training on this, I need you to apply. I don't take everybody. You can't waste my time. So click the link below. There'll be an application link for you to apply for the one-on-one coaching in the J. Morrison Academy. My team will screen you, and if you're qualified, I am happy to coach you on how to be an active and successful real estate investor if you're willing to put in the work and be coachable. Now, for those of you who want to invest passively, Jay, I'm kind of interested in this. And we have some online trainings where even if you're passive, you should still learn this stuff for your family. If you're unknowledgeable about real estate, that's sad, and you should take action in learning it so that you know it and that you can provide the information and insight to your family. They deserve it. But if you're not ready to be an active investor, you can passively invest through the Tulsa Real Estate Fund.com. Through TulsaRealEstateFund.com, it's an SEC-regulated real estate investment crowd fund, which will allow you to invest in real estate for as little as $500 and be an equity owner and partner with me and my partners as we acquire and partner in and lend on real estate throughout the country. Even at $500, you'll get an 8% preferred return, and you'll get your 50% share of the profits. We as fund managers, we get a 5.5% management fee, and we share with you the other 50% share of the profits. This is your passive avenue. Your maximum investment is $50 million, so you can invest anywhere from $500 to $50 million and get an 8% preferred return and 50% of the profits that we create through our experience, through our ingenuity, through our relationships. And so here's two ways you can have a better opportunity cost of your money. Think about that 500. What are you gonna do with this 500 or 1,000 or 10,000? What are you gonna do with it? You're gonna put it leave it in your shoebox? You're gonna put it in a CD? You're gonna leave it in a 401k as opposed to take it from your 401k, roll it over into a self-directed IRA into a passive or active real estate portfolio. All our fund partners are partners in our entire portfolio that we acquire from the moment they come into the fund. So if you come in on a Tuesday, but we acquired property the previous Monday, you don't own any of that property. But if you come in on a Monday and we acquire property on Tuesday, you own your percentage of that property. Then we acquire another property, an apartment building, the following week, you own a piece of that. So you'll own equity in shares, right? We have 1 million shares of this company. We're offering you shares at $50 per share, and you must buy at least 10 shares, which is your $500 investment. So you will be a shareholder, equity owner, and partner with me and the fund members by investing passively through Tulsa, actively learning through our one-on-one coaching in JMA. Click the link below for your application. Here you start your free investors account. We'll have a link for that too. If you want your Tulsa investors account, we'll put a link below for you for that as well. Or go to TulsaRealEstateFund.com. And through all of this, you can even do both. If you want to be active, I want to be active a little bit and learn. I want to be passive, Jay, and I want to support what you all are doing. Or not even support. It's not a donation, not a GoFundMe. This is an investment and a partnership. Jay, I want to partner with you, and I want to be coached by you. You can do that as well. So these are the billionaire secrets. This is how billionaires get their money and assets to work for them. You got to look at the opportunity cost of your money and make critical decisions on what's best for you and your family. So here's what I tell my coaching clients in closing. I tell my coaching clients this. We went over this. We saw the 0%, we saw 3%, we saw the 6%, we saw the other opportunities. If you know the smart thing to do, right? If you look at your portfolio, your CDs, your stocks, your 401k, your cash, you see the opportunity cost, it makes sense, right? I know this makes sense. I'm sure you comprehend by now. So if you know the smart thing to do and you don't do it, what does that make you? I'll say it again. If you realize you had an epiphany, an aha moment, it might be scary, it might be new, but you know it's smart because it makes sense, the numbers add up. If you know the smart thing to do and you don't do it, what does that make you? So I want you guys to think about that as you make the decision for our coaching, for our passive income to Tulsa Real Estate Fund as an investor, or if you want, you can call our office, 1-844-JOIN-JMA, and ask about our online trainings. But for those of you who like the one-on-one coaching, apply, and we'll get to you and give you a free consultation, and we will see if you are a good fit for our program or our online training. I look forward to being your partner or to being your coach or your mentor. Thank you for watching this video. I hope you found value in this video. Please pass it down to your family. Comment below. Let me know what you thought about this video. Was there value here? Share this. Let everyone know that, hey, this is the game that we need to know in high school. We need to know at home. Share this, comment below. Make sure you like the fan page. Go to my Instagram. Like the Instagram. Follow me, please. Let's connect. Inbox me. I engage and be a part of these great ventures with us. Talk to you guys soon. See you on the other side. I'm Jay Morrison, real estate mogul, community leader, 2-time best-selling author, and everything cool, but most of all, lover of all people and a fighter for my people. Peace.